Hi, this is Alessio. Hope you're well. In this video, I'm going to talk to you about this very important chart that you're seeing here right now. And I'm going to explain to you the significance of this chart and what it potentially could mean for the major markets. And in case you're wondering, why are we talking about the major stock markets? Why not Bitcoin? Because as I'm sure you know, what happens to the major stock markets could potentially have an impact also on Bitcoin and crypto as well. All right, guys, I'm going to explain to you the meaning of this chart and what it potentially could mean for all of us. There's something really interesting here that I want to point to that I think you're going to like and enjoy. All right, guys, join me. All right, guys, welcome back. So today, as you can see here, I'm in sunny Bournemouth in the south of England. Beautiful seaside town here. Came here last night, beautiful lights for Christmas. They've already got the Christmas lights up here in Bournemouth. And so I thought I'd come here and make a video for you this morning. Nice and warm here as I'm gonna take a walk for you by the beach. Let me just show you, this is the view from where I'm standing right now. So guys, let's take a walk here by the beach and we can talk about the stock markets. And also, as I mentioned earlier in this video, the potential impact on the stock markets on Bitcoin and crypto is important as well, which is why we mention the major markets. All right, guys, let's talk about the major subject in this video. And I'm gonna explain to you why the majority of people out there are wrong about something very important. You see, guys, as I'm sure you probably already know, the Federal Reserve, the Fed, as I should call it in this video, the Federal Reserve has been aggressively hiking rates. They've been increasing interest rates for the last several months of this year, purely because they want to fight inflation. So as I'm sure you know, inflation has been hitting record highs this year. In fact, I think it hit a record high of about 9%. And of course, the Federal Reserve, what they're trying to do is trying to beat inflation, in other words, to reduce inflation by producing some kind of recession. And indeed, what they've been doing is hiking rates. The Fed has been aggressively raising rates to, in other words, to combat inflation and indeed bring it down. And it seems from the last CPI report, it seems they're probably achieving some success. In fact, we saw in the last report that inflation dropped to about 7.7%. Although whether that's going to last or not, we shall see. So what we're seeing is a drop in inflation. So I'm sure you already know this. Now, here's the bit that a lot of people don't know. And in fact, I'm going to explain to you why the majority of analysts, economists, and I would say most people out there who talk about the Federal Reserve and the markets and inflation, why they get this wrong. You see, guys, most people out there, they think that when the Federal Reserve eventually pivots, in other words, when the Federal Reserve eventually says, you know what, we've finished with raising rates, we're going to cap rates, and we're going to start cutting rates. By the way, this is what's called the Fed pivot. So when I mentioned this term, Fed pivot, in this video, what I'm referring to is a situation when potentially in the future, the Federal Reserve, the Fed, will start cutting rates, not raising rates. In other words, a major turning point for the Federal Reserve when they will decide to essentially bring about a reduction in rates, hence the term Fed pivot. By the way, some people think that this Federal Reserve pivot is going to occur maybe in December. Some people are saying it's going to happen next year in 2023. Nobody really knows when the Fed pivot will actually occur. I don't know either, to be honest. It actually doesn't really matter. But here's the thing. I think it's probably right that the Fed pivot, it probably won't happen until next year in 2023. All right, guys. Now, here's what most people get completely wrong about all of this. You see, guys, the majority of analysts, economists, and most people out there, they believe that when the Fed pivot eventually occurs, whether this year in December or next year in 2023, in other words, when the Fed decides to cut rates, not raise rates, then that's going to be the moment when the stock markets will suddenly rally and explode much higher. In other words, the majority of folks out there, the majority of people, analysts, economists as well, they believe that the Fed pivot will cause a massive surge in stock prices and a significant rally in stock market prices. So what their assumption is they believe that the stock markets will continue to drop and crash further lower until the Federal Reserve pivots, in other words, until they change their mind and start cutting rates, and then the market will rise significantly higher and probably make all-time highs, new highs. That's the assumption. That's what most people out there, again, economists, analysts, the majority of these folks believe. But I want to show you something that explains why the majority of people out there are actually wrong on this assumption and view. Have a look at this chart. By the way, this chart you're seeing here is courtesy of Elliott Wave International. Again, Robert Prechter's newsletter. I don't make any commissions from recommending them. I just mention them because I think Robert Prechter is a fantastic analyst and I think they do a wonderful piece of research in their newsletter. According to Elliott Wave International and this chart you're seeing here, there's something very interesting about all this. You see, guys, there are two things which this chart shows. Firstly, it shows that before the Federal Reserve pivots, in other words, before they decide to cut rates, in other words, change from raising rates to cutting rates, actually, the stock market usually rises and rallies right before a Fed pivot. So, in other words, if you have a look, for example, some examples, let me show you some examples. Take a look, for example, at the year 2007. Okay, in 2007, the market rallied, and then when the Federal Reserve pivoted, when they changed their minds and said, you know what, we're going to cap rates and start cutting rates, then the stock market began a major decline. Have a look in the year 2000. In the year 2000, the market had rallied higher, and then when the Federal Reserve pivoted, then the stock market made a top and then started a major decline. In other words, guys, by the time the Federal Reserve pivots and then starts cutting rates, the market usually rallies before that event, before that actually happens. And then the market tops or forms a top pretty much soon after the pivot occurs and then starts to go down. I'll give you some more examples. This is one in 1969. Again, notice when the Fed pivot occurs, right before that there's a rally and then the market makes a top and then starts to make a major decline lower. And then if you look at the one in 1970s, 1973, notice again, market rallies, the Federal Reserve pivots, and then the market makes a decline. And the same thing happened in 1981 as well. So guys, that's the first thing we need to appreciate about all of this, that usually by the time a Fed pivot occurs, by the time the Federal Reserve says, you know what, we're going to cap rates and we're going to start cutting rates, by that time, the market, the stock market has already rallied. It's completing a rally, it's making a topping formation, and then starting a major decline after the Federal Reserve makes a pivot and they start cutting rates. That's the first thing we have to remember. The second thing we need to remember is this. The majority of the decline, the majority of the drop and the crash in the major stock markets occurred after the Federal Reserve pivot, not before. So again, here's the example from the year 2007. Notice after the Federal Reserve pivots and they start capping rates and then cutting rates, then the stock market makes a top. Notice the rally in the market had completed by that time. So we see a top, and then the biggest part of the decline, about a 58% drop in the stock market, occurs from 2007 all the way to 2008 and 2009 bottom. Same thing happened in the year 2000. Notice in the year 2000, after a major rally in the markets, then the Federal Reserve pivots. In other words, they start cutting rates, and then you see a top form in the major stock markets, and then a major decline occurs. Again, about a 50% drop in the stock markets after the Federal Reserve pivots. The same thing happened, by the way, in the year 2019. As you can see there, Federal Reserve pivots, and then the market had a 35% drop. Same thing happened in the 1970s, as you saw. In the 1970s, Federal Reserve pivots, market makes a top, and then the biggest drop in the stock market occurs after the Fed pivot, not before. Okay, and so on and so on. Now, of course, there was one exception to this rule, in case you're thinking, well, what about the 1980s? It's true, the 1980s was an exception to this rule, but I would say this, ask yourself, is the current situation in the major markets anything like the 1980s? I think you'll agree with me, it's not. In fact, fundamentally and technically, we're nothing like the 1980s. In fact, I would say the situation right now, both fundamentally and technically speaking, from a chart perspective, we are much more similar to the 1970s and the 2000s, not so much the 80s. So in other words, guys, this chart shows, again, looking at it from a statistical point of view, if history is a lesson to all of us, this means the majority of people out there are completely wrong. Analysts and economists who are saying that after the Federal Reserve pivots, maybe in December or next year, then the stock market will suddenly rally higher and go up significantly. No, they seem to be wrong on this point. In fact, as this chart shows to us, it's the opposite. Most people have it backwards. In fact, it's quite likely that when the Fed pivot occurs, when the Federal Reserve eventually starts capping rates and they start cutting rates, then by that time, any rally in the stock market is probably already completed. And then we're going to see a potential top and then a major drop. The biggest part of a bear market drop is going to occur after the Fed pivot, not before. Now, I know what you're probably thinking. Well, this makes no sense. There's no common sense or rationality to any of this. Well, you would be correct. Because as I'm sure you know, guys, the markets are not rational. In fact, if anything, the markets are irrational and they don't make any sense. Now here's, I think, the explanation behind this. You see, most traders, and again, I'm talking about professional traders and again, institutions, they don't wait for the news to come out. They don't actually wait for the Fed pivot to occur before they start placing their bets. No, as I'm sure you know, traders and market participants, they place their bets months, many months before the actual news and the event occurs. So in other words, guys, what you see in the market, when you look at the stock market, or indeed any market actually, what you see is what the traders out there are anticipating many months in advance. They're placing their bets 6 months in advance, many months in advance, in expectation of the actual events. Now, putting into context, what that means is this. That means if the Federal Reserve is going to make a pivot, either in December of this year, which I think is unlikely, or let's say next year in 2023, which I think is more likely, that means traders and market participants, they're not going to wait until the Federal Reserve actually makes the pivot. No, they're going to place their bets now, many months before the Federal Reserve decides to change its mind and starts cutting rates. So what that means is, if the rally in the stock market continues from October to December, what's called a Halloween effect, which by the way may last all the way into next year, we'll see. I mean, we don't know how long this rally in the market will last. It could last a few months, it could last a few weeks. Nobody really knows, but let's say the market continues to rally to the end of December and potentially even next year into 2023. By the time this rally takes place, and by the time this rally completes, and then when the Federal Reserve decides to cap rates and makes a pivot, by that time, it's quite likely the rally will have completed, will have come to an end, and then we'll see a potential top in the major markets. And then after the Fed pivot occurs, then we'll see the market top and then a big major drop in the stock markets. And as I just explained to you in this chart, the majority of the decline and the crash in previous major bear markets occurred after the Fed pivot, not before, which is exactly the opposite of what most people, again, most analysts and economists believe. And I think they're wrong, by the way, guys. Most analysts and economists, they have this completely backwards. By the way, guys, I'm going to come to the end of this video in a few minutes, but let me just take you to the beach. It's right in front of me right there, as you can see. Let's walk there to the beach and like I said, the final words of this video. Now listen guys, I realize of course I could be wrong. Maybe this time it's different. Maybe most economists and analysts are right, and maybe it is possible that when the Fed pivot occurs eventually, maybe December or next year, that the market will make even a bigger surge, an even bigger rally after the Fed pivot. But I personally think that's not correct. Again, based on what I'm seeing on this chart and historical evidence and statistics, it seems to me that view is probably wrong. And I think that if the Federal Reserve decides to pivot next year, if they don't do it this year, that is, if they do it next year, when you hear the words Fed pivot next year in 2023, or let's say by the end of this year, when the Federal Reserve says, you know what, we're going to cap rates, we're going to start cutting rates, in other words, when the Fed pivot occurs, that is the time to be extremely cautious. I think, by the way, I think the stock market will rally ahead before the Fed pivot occurs. Again, just to repeat this point, I think the stock markets will probably rally in expectation of a Fed pivot by next year in 2023. But when the Fed pivot occurs, that's going to be too late. By that time, when the Fed pivot occurs, the market's probably already making a topping formation, and then we'll start the next major drop, the next big portion of the decline in a bear market after the Fed pivot occurs. So that's what I think is much more likely. In other words, in simple terms, a Fed pivot will not be the good news that many people think out there it is. The Fed pivot, when it occurs, potentially next year in 2023, will be the start of the next portion, the next major portion of the decline and drop in the major stock markets. The opposite of what most people think right now. One final thing to mention here before I finish the video is quite important, which is this. Many of you have been asking me about our LT Elliott waves indicator. Now, as you know, we have an indicator which I actually developed, and that's called the LT Elliott waves indicator, as you can see here. And here's a very special offer for you. You can get our LT Elliott waves indicator at a very special discount. By the way, the very same discount we offered when we first released this indicator. And you can go on this link you see here, leadingtrader.com/EWT, and then apply this promo code EW special. So when you enter that promo code into the box, it will take off $200 off the price for you at a very special discount price. And by the way, this offer expires at the end of November on Black Friday. All right, guys, so it's only for a limited time. And by the way, when you get the LT Elliott Waves indicator, you will also receive our new LT Elliott Waves 2.0 indicator, which is going to be released by January. That's January 2023. So you will also be included to receive our LT Elliott Waves 2.0 indicator, the brand new version for TradingView by January. And by the way, you'll get the new version, the 2.0 version, for free. So no extra charge for the new updated version. All right, guys, so you can go ahead now on this link. That is leadingtrader.com/EWT and apply the promo code. Again, EW special is the promo code, and you get $200 off the price. And again, remember, this special offer is only for the coming month of November. It expires on Black Friday. Thank you very much indeed, guys. I look forward to seeing you in the next video update. Bye for now.